Hey guys, Joe here from JCS-Charting. It's Friday afternoon, the 20th of December. Here's an early weekend update about the DAX and the US markets. I try to cover the metals, gold and silver as well. We jump straight into my Discord. You see here the main channel. You find here plenty of analyzers using my indicators of identifying tops and bottoms. Here you have the time frames order. These are like proper charts we use for our trading setups. For example, here I analyzed on the 8th of December. We actually had plenty of updates considering smart money was pulling out of that rally. The stocks in the index didn't participate really with these new all-time highs. This is a percentage of stocks which are actually above their 200 moving average. You see a nice divergence here. Here you have the same with stocks at their 20-day moving average and the 50-day moving average, and the same with the 150 and the 100-day moving average. They all diverted at the top. Smart money was selling into it. That was another divergent, and here's actually our next very reliable topping indicator. It's our advanced decline ratio, which came down here to our threshold at 1.6, and then on the 10th of December it was flashing red. That was a few days before the actual all-time high was in. And it got even worse. The threshold here got beaten, and then smart money also started to sell at the top last week, Friday on the 15th. And as you can see, I give my members a little explanation with it, so they will get a better understanding. And this here was the end of last week. We had at the H1 thread, we had a nice bullish Wilbur wave wedge. I was anticipating that we run into these min targets here at least. DAX turned around, was hitting that target line quite early. I said most likely it will cover in that red zone, and that happened. And then I came up last weekend with that pattern. It's called a head and shoulder pattern. You have a left shoulder, a head, and a right shoulder. Give my member these targets. The right shoulder is in the making. And then on Monday already it got triggered and it fired straight away to our first target, which was at 2290. Triggered also that red sequence here, by the way. They have a very high probability for min targets of being hit. And we keep going. That was here the 18th, so 2 days ago on Wednesday we were hitting all targets overnight. That was here the morning session, which failed again. Yeah, that was yesterday. I didn't have that much time yesterday, but I came up with that little triangle here. I also gave my members that red sequence here. And after DAX broke out of the triangle, I come up with these targets, usually on time, and they were being hit, all of them, this morning. And DAX isn't done in my point of view. And if we quickly jump into the daily thread, I also show the VDAX, the volatility of the DAX here. There's also a very nice cycle going on here. It suggested a low around the 10th of December. It's usually associated with a top, so the opposite in the index. Here was another daily chart. We were hitting all these targets here, by the way. And here's an update of the VDAX. That was here counting the tops. I was twittering that actually quite a lot. I didn't give you the chart. And here was our update about the VDAX. I said once we are hitting that red dash trend line, there's a high probability with a rising histogram of the MACD and that we rally at least to 33% on the average. And We were undershooting that a little bit before we were turning around, and this morning I gave my members an update. We were rising already 40% on volatility. Histogram was actually turning positive this morning, the crossing, and I gave my members that hint before the crossing, which is actually very important to understand. Counting the tops, by the way, also worked out. We had an average top count of 36 days. DAX was extending that to 41 days. That was the last update from last Friday, and I said DAX is on the very late side, is on the extreme range, and it looks already like a reversal shooting star. That was that candle right here. And we're having a look at the same chart. This is now a live indication of the daily Cetra chart. As you can see, 41 days was the top to top count on the 13th, which was last Friday. And presently, DAX is hitting the 23.6 retracement of the entire rally, of that entire primary cycle, which started on the 5th of August at 17,024. And this is the absolute minimum retracement of a primary cycle. Usually it goes somewhere into the 38 up to the 61. And we're going to check on the weekly now how long that could last for. Yeah, and here you have the weekly channel. I was showing that in my last update, so I won't zoom in. This here is the entire primary cycle we just talked about. It's subdivided into 3 major cycles. We topped out now in week 18 with a very nice evening star I was giving to my members last Friday. And I told them we need confirmation for this week. So this bar here is actually the confirmation for that reversal pattern. I don't think the low is in. I think it will last at least until next week. That would be the minimum on the time band for a primary cycle correction, but usually it lasts 3 to 5 weeks. And last but not least, the course index is a more important index because it doesn't consider the dividends. So this is actually the real DAX. I was showing that many times in the past. The last update was here. I said the minimum move should be at least 5% to the upside. That occurred perfectly, and we missed out the second move to hit the first target of that blue descending broadening wedge. Also the 100% target didn't get hit. Now I wonder if DAX is just going to retest these latest all-time highs out of October. That could be another buying range here on a shorter term, but we need to have a look what the primary cycle is going to do. My members have already a next turning date, an astro turning date. If you want to know more about it, you can join us at JCS-Charting.com for much more great insights. We switch into the US markets. It's a daily chart of the Dow Jones Industrials. Here's the starting point of that primary cycle. It got 1, 2, 3 major cycles as well. We topped out here, different to the DAX or the S&P 500 and the Nasdaq. So we had a very nice intermarket bearish divergence we were looking for. We topped out on the 5th of December here in the nice bearish Wilbur wave wedge. We didn't hit that upper trend line, which is not necessary. We just need to have a third peak, which is higher than the second. So that worked out. We were hitting already the target line, which is around the 38.2 retracement. But I don't think that's it. I think we're gonna run deeper. The current future indication is already 250 points below that closing price from yesterday. So somewhere at least into that retracement box between 41,786 to 41,010 would be a nice correction of that primary cycle. Another daily chart of the Dow. At the top, the industrials, at the bottom, the transportations. The transportations failed to break through new highs or to get over the November highs, and the industrials kept making highs until December 5th, and then we had that negative divergence which got sold off quite intense, and now we are waiting for the next divergence. They could be coming up because once we compare these lows to that low, the transportation's already breaking those lows, where the industrials are actually staying quite above it. There can be also a daily divergence that the industrials, for example, they don't make new lows on that day, but the transportations do. That could be also a smaller divergence, but usually they develop over a few days or even weeks. And a quick look at the S&P 500 now. We are jumping back into the Discord. I do the same analysis for the S&P and the Nasdaq as well with all these indicators. We had the same warning sign, even worse than DAX at the S&P 500. Smart money was pulling out during the entire rally. The sentiment was very bullish at the top with 48% of retailers in call positions, and we saw a little divergence here in the build-up already. And the same with these moving averages. It's the MMTW at the S&P 500. So it gives us an average of the stocks which are above the 20-day moving average. And that was completely negative already, below the threshold we use. Smart money here was pulling out even more, even we kept making new all-time highs. And yeah, the result is that kind of little crash we are experiencing after the Fed. This is a VIX, our daily chart. We had actually a nice 9 count here, which extended a little bit. It didn't work on the day exactly. Actually a week after that. However, it was very close in our time frame for that suggested cycle low around the 6th of December. The actual low was on the 13th, and I said usually there's a huge spike up at least to hit that major trend line, and that came with a large gap up. By the way, this is a switching of the futures contract. So that's why I don't like to chart futures, because that actually makes that kind of analysis for charting very imprecise. However, there is that large rise of the VIX. I'm counting already 1, 2, 3, 4. We might spike all the way up to 9 candles for a Swedish 9 count at the volatility. And that could result in a fast moving low in the next upcoming days. And a quick look back at the index. Here we have our cycle brackets, and as you can see, they work in a clean pattern. And since we are about to break the cycle start, I assume more selling pressure into Christmas at least. That is the next suggested low we have at the S&P 500. And by just looking at the volatility, that could occur quite fast. And we look into the smaller time frames. This is now the H4, and you see here a neckline which got identified, which is usually associated with the head and shoulder pattern or a cup and handle. In this case, we have a left shoulder, a head, and a tiny right shoulder, which qualifies as a proper shoulder head shoulder pattern. Gives us the first target at 57.01 and a 100% move of 55.73. Also note 56.73 is already my magnet, which is active. And somewhere here are the all-time highs at 56.69 out of July. And you see also here these retracement levels. They are the common levels in which the primary cycle usually corrects into. So 38.2, 50%, which is close to the 100% move. And if the S&P plays that red sequence, we could move all the way down to 54.75. Note the 100%, the magnet is important. We might bounce there and have a strong rebound, or we trigger that to run lower. And here we got the Nasdaq 100 on the daily. Here where you see the all-time high, I was giving my members, we have an evening star here, which could be a reversal pattern if it confirms the next day. It didn't happen. We got a gap up. We triggered that green sequence here, by the way. And now we sold off. We were also here holding short positions. We got rid of a few this morning. And the next cycle low is also due around Christmas. Yeah, we have a quick look at gold. That was a little bit unlucky because we had a cycle start, a new primary cycle start here in the middle of November. We rallied for over 200 points, which is a lot at gold. And then we sold off. We came back up. Couldn't really sell all my positions here, and I was holding on to them. Most of them I got kicked out now at entry. However, there's a nice cycle pattern here at the H4 time frame, and this low is now important. Once that breaks, we are most likely moving lower into the next cycle low, which is at the end of the year. Keep in mind that that primary cycle low needs to hold. Once that gets broken, we could see selling, or much more selling, for the next couple of weeks. That is actually very important. As long as that low holds, that primary cycle is still able to turn bullish. And a confirmation would be to break through these highs. So if it's a buying opportunity right here, you need to place that stop somewhere around that low. That gives you still a great risk-reward ratio at gold. Yeah, this is silver, and this actually looked quite good at the end of November. First of all, we had this very nice descending broadening wedge here. It had other targets around 35.80 and 36.89. However, after that green sequence here got triggered with that bar, we went to the min targets exactly and turned around to finish that primary cycle right here in the middle of November, and then we actually were undershooting that low by the end of November, and we had that intermarket divergence to gold, which is usually a buy signal, and we were buying that, but we were kicked out now at entry again because that cycle, if this is a primary cycle start, turned in already bearish. We have a bearish pattern here now, a shoulder head shoulder formation once again with the falling neckline, which is quite steep. We have targets around 26.74 and a 100% target at 24.36. The real move could start below 28.56. So we need to watch out for that. The next cycle low, a smaller cycle low, so this is like a sub-cycle, is due by the middle of January. Yeah, that's about it. If you enjoyed watching my video, hit that like button or leave me a nice comment. I wish you a Merry Christmas, a nice holiday. On my next update, I probably gonna show some stocks again, and I probably make one during the holiday or just after. So I wish you a Merry Christmas, enjoy your weekend, and yeah, take some time off, and we see you probably after Christmas or in the new year. Bye bye.